Well, talking about banks and staying with that theme, let's bring in Tom Brown. He is a former top-ranked Wall Street analyst, and he manages Second Curve, which is a hedge fund investing in financials. And as I mentioned earlier before, a very important voice in the banking industry. Tom, thanks so much for joining us.
Well, good morning.
Okay, so before I get to the banking industry, though, because it's Jobs Day, I mean, I want to get the view from everybody that I'm talking to this morning about what you expect from the jobs report. What are you looking for, and what are you looking for in the market reaction?
Well, I guess I'll answer that with a non-answer, which is what's not in there is that if you raise capital requirements on banks unofficially, which is what's happened and what you see with Bank of America, that is going to cause the cost of credit to small businesses and the availability of credit to small businesses, cost to go up, availability to go down. And that is a huge problem that I don't hear anybody talking about a proposed solution.
Because you're saying, okay, I want to put that in context. So what you're saying is that Bank of America raising that capital, increasing the capital cushion, prevents them from lending more money and therefore spurring the economy. Is that what you're saying?
Yes, the official capital requirement for banks is that they have to have a Tier 1 capital ratio of 6%. Bank of America ends up today with a Tier 1 capital ratio of 11%. Now, they didn't get there because they wanted to. They got there because they were pressured by the Treasury Department to have a well above minimum capital level. And that is a huge negative on the availability of credit in this country.
Relate that back to jobs, though, Tom, because that's what I was asking you right ahead. Relate that back to jobs.
Well, if a small business can't borrow money, and they can't borrow money at a reasonable rate, like the prime rate, and the reason that they can't is because the banks have to hold more capital, almost twice as much capital, for every dollar that they're going to lend to small businesses. So I can see small businesses saying, I want to expand my business, and they go to the bank, and the bank's saying, well, yeah, I'll lend to you, but it's going to be at a rate that's 50% higher than it would have been 18 months ago.
But the argument, of course, Tom, is that the banks maybe need that capital because we're not quite sure if we're over these financial shocks.
Well, I'm sure. I look at this stuff every day, and the credit costs in the industry have peaked and are going to have a slow decline in the fourth quarter and then decline dramatically beginning in the first quarter of 2010. So, we have passed the crisis period, and having capital levels that are twice what the standard is just doesn't seem to me to make any sense.
Okay, Tom, we'll have to leave it there.